We use it every single day, right? But do we really understand it? Well, today we're going to decode the secrets of money and its very powerful and sometimes, well, dangerous sibling, credit. So let's get right into it.
Have you ever just stopped and thought, why does this little piece of paper or this metal coin get me anything I want? I mean, why don't we just trade stuff? It seems like it would be so much simpler, wouldn't it? Well, as it turns out, not really. To really get why money is so important, let's do a little thought experiment. Imagine a world with no money at all. Let's meet a shoemaker. Now, he's fantastic at making shoes, but he can't eat shoes. What he really needs is wheat to feed his family.
So our shoemaker heads over to a farmer and says, "Hey, how about these amazing shoes for some of your wheat?" But the farmer just shakes his head. "Sorry, I don't need shoes, I need clothes." Okay, no luck there. Then he finds a cloth maker. And great news, she actually wants shoes, but she doesn't have any wheat to give him. So again, no deal. Our poor shoemaker is stuck with great shoes, but an empty stomach.
This huge headache has a name. Economists call it the double coincidence of wants. It's just a fancy way of saying that for a trade to work, I have to have what you want, and you have to have what I want at the exact same time. And as our shoemaker just found out, that's incredibly rare and makes life very, very difficult.
So clearly we needed a better system. And this is where one of the most brilliant inventions in human history comes into the picture. You got it, money. It's the simple, elegant solution to this whole messy barter problem.
Okay, let's rewind that scene for our shoemaker. With money, he doesn't need to find a farmer who wants shoes. He just sells his shoes to anyone for an agreed-upon price, for money. Then he takes that money and goes and buys wheat from the farmer. Simple, problem solved. Money just acts as that perfect go-between.
Now, of course, money hasn't always been the paper and coins we know today. In the past, people used all sorts of things, grains, cattle, even gold coins. But today's money is a whole different ballgame. It's mostly the currency the government issues, and maybe even more of it is just the digital numbers sitting in our bank accounts.
And this brings us to a really fascinating point. Unlike a cow or a bag of grain, a 500 rupee note, well, it has no value on its own. You can't eat it, you can't wear it. So why in the world do we all agree that this piece of paper is valuable?
The answer, really, is trust. We accept it as valuable because it's authorized by the government. In India, it's the Reserve Bank of India, the RBI, that issues currency. The law itself says that it must be accepted as payment. So it's that official government promise that gives a simple piece of paper all its power.
All right, now let's talk about that other form of modern money, the money in your bank. We call these demand deposits. And the name is pretty simple. Why? Because you can withdraw them on demand, anytime you need to. It's a system that keeps your money safe, maybe earns you a little interest, and makes paying for things super convenient.
And a check is a perfect example of how this works. When you write a check, you're not actually handing over cash. You're just writing a note, an instruction to your bank to move money from your account into someone else's. The whole transaction happens without a single rupee note ever changing hands. Pretty cool, right?
Okay, so this brings up a huge question. We all put our money in banks thinking it's safe, but what do the banks do with it? Do they just pile it up in a giant vault somewhere? No, definitely not. So what exactly is going on with our money?
This is one of the most important things to understand about banking. Banks only keep a small fraction of all our deposits as cash on hand, let's say about 5%. The rest of it, the other 95%, they use to give out loans. And that, right there, is how banks make their money.
So really, banks are like matchmakers for money. They act as mediators. They take the surplus money from people who are saving it, the depositors, and channel it to people who need it, the borrowers. And this whole process of lending money out is what we call credit.
But here's the thing about credit. It's an incredibly powerful force that can be a huge help, or it can become a really dangerous trap. Let's look at two very different stories to see exactly how this works in the real world. So first up, we have Salim, our shoe manufacturer. He gets a massive festival order, but he doesn't have the cash on hand for the raw materials or to hire extra help. So he takes a loan. He uses it to fulfill the order, makes a fantastic profit, and pays back the loan with no problem. For Salim, credit was the key that helped his business grow.
But now let's look at a totally different situation. This is Swapna, a small farmer. She takes out a loan to cover all the costs of planting her crops, hoping for a good harvest. But then disaster strikes. Pests completely destroy her crops. Now she has nothing to sell, which means she has no way to repay the loan. And that debt, it doesn't just go away. It starts to grow.
Swapna is now caught in something called a debt trap. This is a really vicious cycle. It's where you're forced to take out new loans just to pay back your old ones. And once you're in it, getting out is incredibly difficult.
So you see, for Swapna, the exact same thing, credit, that helped Salim succeed, it actually pushed her into an even worse financial spot. Instead of helping her earn more, credit made her situation much, much more painful.
Okay, so we've gone all the way from a world without money to the complicated world of banking and credit. So what's the most important thing to remember from all of this? Let's break it down.
First, money is just a genius invention that solves that whole double coincidence of wants problem. Second, our modern money system only works because of trust. Trust in the government and in the banks. Third, banks are the essential middlemen, moving money from savers to borrowers. And finally, and this is a big one, credit is a double-edged sword. It can build fortunes, but it can also lead to a devastating debt trap.
And that leaves us with one final, really important thought to chew on. Since credit has this incredible power to both help people and to hurt them, it makes you wonder, right? What kind of rules or systems should we have in place to make sure that credit is fair and safe for everyone, especially for the most vulnerable people? That's definitely something worth thinking about. Thanks for watching.